following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is a quote by Kobe Yamada. Believe in the magic of tomorrow, and your spirits will be lifted on the wings of hope. Yesterday's gone. Tomorrow's not here. What are you doing right now? It's a beautiful thing. Market-wise, let's take a look at it out here. We have the Dow Industrials up 76, Nasdaq's up 14, S&Ps are up 4.5. Gold contract down $8.80, trading at $1,209 an ounce. Silver down 26 cents at $16.85 an ounce. Platinum down 4 at $1,173 an ounce. Copper up 4.5 pennies at $2.75 a pound. Light sweet crude up $1.73, trading out at $53.86 a barrel. Bonds, we have the 10-year flat at 129.12, 30-year up a full point at 164.24, and King Dollar. King Dollar's up 1,074 ticks, trading out at 98.03. The euro is down 90 at 108.32, and the yen is trading up 80 at 120.33. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. We go to the world of the S&Ps. We take a look at them. What do we have out here? Okay, let's check it out. So what the S&P is doing, folks, is this. If we look at the SPY first, what we had done yesterday is that it's trying to get in, up, and over the price point of 208.61. That level there, that 208.61, okay, what that level specifically is that is where we had gone topside on the 30th of March. We did 96 million shares there. Now, that was going into the downdraft, okay? So the downdraft that had been going into was the downdraft that was created on the 25th. So as we go through this, what we had yesterday is this. Yesterday, you try to get into that downdraft with 114 million shares. Today, we're at 50 million. It's going to be anemic. This is really, you want to wrap your head around this, okay? Because what markets are all about is energy, you know? And what does happen is this, is that the more energy that gets expended and it doesn't make the line, what ends up happening? Markets get weaker. That's what we have out here inside the S&P. The correlation is pretty cool, so watch. And the correlation I'm going to bring you on goes right from the top coming down. Your first benchmark out here is the March 6th downdraft. You know, so we had made a high on the S&P. We made that high on the 25th of February. We made that high with 73 million shares. We come off that high, and we came off with 188 million shares. That 188 million shares, that was on March 6th. So you come down with some juice. You go back topside. Now, as we went back topside, and this is really deviant, okay? So as we go back topside, we went from 207.10, we get down to 204.50. We go back topside, and we had a big day. March 18th was a big day. March 18th, we ended up doing, let's see, 228 million shares, so huge shares. But guess what we didn't do? If you have The Art of Time in the Trade, my book, you know that it's at swing points that talk, walk, and squawk markets, all right? Well, what ended up happening is that you get up high, you don't hit the swing point, you have the volume. Then what ends up happening? Well, guess what? You go up there and test it. You test it 2 days later. As we're trying to test it, the volume drops to 177. Is that over? Nope, it's not over. That's on the 30th. Guess what happens? No, that was on the 20th, March 20th. Next day, tries to test it again, gets even weaker. Next test comes in with 71 million. Okay, so now what you have is this. You have the downdraft, you have an updraft, you have 2 tests of the updraft, can't handle it. What ends up happening? You go downtown again. As we go downtown, what do? We go downtown. As we go downtown, you get downtown with 159 million shares. Okay, so those are your 2 benchmarks. Your 2 benchmarks are the 2 downdrafts, March 6th as well as March 25th. Okay, so now where are we now? I always say yesterday's gone, tomorrow's not here. Where are you right now? Well, check it out. What the market tried to do yesterday, folks, is that when we went topside on March 30th, bottom line, it couldn't make the top of the downdraft. Now, that in itself is saying, okay, you're weak, you couldn't make it, right? We got up there, and in this case with 96 million shares. Yesterday, you try to get into that level with 114. Today, what you're going to see, and this is going to be really wild watching this whole thing shake out, is that I suspect you're going to have 2 different things. We're going to close under the highs of yesterday, which is under 208.45. We're going to close, of course, under the highs of 208.61, if I think it's going to be 45. And what you're going to have, though, is dramatically lighter volume. It's going to be a major failure. What would that set up? If, in fact, that's what we have, that would set up. You can't bust them up. You're going to try to bust them down. So it's going to be wild watching this whole thing shake out. What you do have, and this is what is the drop-off on volume is extensive. I mean extensive in a huge way, not in a small way. If we go over to the 3 Qs, we take a look at the 3 Qs. What do you have with the 3 Qs? Same type of setup. 3 Qs today, we've done 13 million shares. Yesterday, we did 24 million. Bottom line, you're coming into 41 million. There's no buyers here, man. That's the bottom line. You get no buyers, guess what? It's not going to take a lot of sellers to basically bring this market lower. What I expect you're going to see as we're coming into this close, well, let me go over to the futures quickly so you can see what we have happening. We've had 2 very subtle, basically small downdrafts inside the market out here this morning. And I mean tiny, too, and they're subtle. They're subtle beyond belief. There's no 2 ways about that. But what we've had is this, is that if we take a look at this, what you're going to see is that the S&Ps right now are at 2077. And what we've had is this. At 11:20 a.m., you had a little downdraft in the marketplace. You had the second one with volume that brought you down to 2076 at 1350. Bottom line is that we are working on another one right now. So as we come into this close, I expect what you're going to see is that more than likely it's going to try to get into about the 2072 area. That's kind of how this is set up right now. Now, it's only 5 points down. That's not a huge amount down. There's no doubt about that. But what that is, that's going to be a major failure when you put the rest of it together. Gold contract. Let's go over and take a look at gold. What do we have with gold? Gold is backing down, folks, right into its strength, and you're backing down with dramatically lighter volume. What you have with the gold contract is this. This is pretty sweet, man. So if we take a look at gold, what you're going to see is that gold is trading at 1209.90. You're down $8. You have volume of 77,000 contracts, and that's crucial, understanding 77,000 contracts. Why? Because we're coming into 115,000 or 150. Yeah, 150. It's beautiful. That sign of strength that we had on April 1st, that was 150,000 contracts. Monster. So you're coming into that with dramatically lighter volume. What that would set up is this. That will set up another run to see if it can get up and over the 1220.40. And we'll see whether we get the volume this time. What we had yesterday is this. You had a failure yesterday. You went into that high with 104,000 contracts versus 113,000. Now, that's pretty close, so that's not bad, but you're still a failure. The backing down today with lighter volume is setting up another run up into that level. Now, with that said, what is really impressive inside the metal market today is the aspect that you have the dollar going to the moon again. It really isn't, but you have that nice expansion of price. You have 38,000 contracts traded, and gold's not getting smoked. The dollar index is up 1,000 ticks right now. That is running into, you're at 38,000 contracts, and that's not even close, meaning the dollar would have to start doing about 90,000 contracts in order to get some real traction to the top side. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow Industrials are up 66. NASDAQ's up 12. S&Ps are up 3.5. And you can expect, folks, you're going to see some selling coming into this close. Going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now up 58. You get the NASDAQ up 9. S&Ps are up 2.5. And listen to this stat, folks. This is pretty amazing. If you've never taken an Uber car yet, if I'll tell you, I think there's a public company that actually lends money to taxi drivers. And, you know, if you're a taxi driver out there and you own a medallion, man, I'd be selling this medallion as quick as you can. In fact, when we were just up in New York, we're at the Traders Expo up in New York, we had taken an Uber car, and then we had taken a taxi too, and we were talking to the guy in the taxi, and it happened to be the guy's son that this guy had built up 3 medallions over the course of someone, you know, over 30 years, I think, worked his butt off, okay? Bottom line, and talking to the young guy, you know, he was saying, yeah, we're going to get them out of New York. And I'm looking at him saying, man, how are you going to get them out of New York? I'm thinking this to myself, but listen to this stat. This is pretty intense. Okay, so the way the story goes is that worry about impact on jobs or quibble with the tactics, but give Uber this. The ride-hailing startup is taking over transportation within cities at stunning speeds. Wait till you hear these numbers, folks. This is sick. Here's the latest evidence. Last month, Uber accounted for 47% of all rides expensed by employees whose company used Clarify, the second largest provider of travel and expense management software in North America. In March of 2014, Uber only accounted for 15%, according to the study by Clarify released on April 7th. So picture this. And this is where the bread is, folks. The bread is in corporate expenses, right? I mean, because what ends up happening is that you're going in, you're going out. If I'm doing business up there, you know, anyone doing business, you go into the city or out of the city, whatever it is, and you just got to pay the VIG. That's it, right? Bottom line is that they only had 15% of the business last year. They have 47% of it now. Now watch this. This is over that period, the amount spent on traditional taxis, limousines, and airport shuttles fell from 85% to 52%. Lyft, a rival ride-hailing service that caters more to consumers than professionals, only accounts for 1%. Uber has changed the dynamic of business travel, says Robert Novo, certified chief executive officer. They were the first to market with a phenomenal service. They expanded rapidly in the results that our users are adopting the heck out of it. His company has no business relationship with Uber. They only use the expense relationships. So listen to these cities, folks. The study also broke out data from 8 major U.S. cities, showing that Uber is growing fast in some places than others. In San Francisco, its oldest market, it accounts for 71% of rides expensed by Certify, up from 58% last year, while taxi use in the city fell from 42% to 29%. Uber is also taking a majority share in Dallas and is close to achieving that in Los Angeles and Washington, D.C. In New York, okay, which is the largest taxi market, Uber still has a relatively small foothold. 21% of expense ride went to Uber versus 79% to taxis. Progress has also been slower in Chicago, from 8% last year to 25% this year. That's huge, man. That's grown by 200%, suggesting that Uber has faced a more uphill climb in cities where yellow cabs are omnipresent and woven into the fabric of daily city life. Now, there's no doubt it is woven into that city life, particularly up in New York, because when we were looking at this too, I was looking at the aspect saying, oh, this is going to be interesting. What does happen is that the Uber car was great, clean, fast. On your app, you know where it is, you know where it's coming to. But what does happen in New York City is nothing like hailing a taxi down. But bottom line is that you wouldn't want to be in that business. I wouldn't want to be in that business. There's no doubt. The cars are cleaner. Everything about it is a good ride. And what they have done, too, this is kind of interesting. This is really interesting for folks that are basically looking for jobs and growing up, you know, just young guys, young women, whatever. They have programs, and what the programs is, you want a loan to buy a car to do the whole bit. Guess what? You walk in there, they got it done. And they have that right inside the every one of those Uber cars too. So it's gonna hurt a lot of people, and it's gonna help a lot of people. The aspect of those medallions, though, the guy was telling us that the medallion, now so picture, we were up there last month. Medallions in New York City used to go for $1.4 million. With Uber coming in, they went now 1.2. They're going to go for less than that, because the bottom line is what? Guess what? You can get a Uber car and you're paying nothing. It's like, you're really going to pay $1.2 million when you have to pay nothing? I don't think so. Intense. I haven't done any really research on it. I actually can't figure out how they can just walk in, and what is the, they're powerful enough now they're going to basically take it over. That's my point. But I'm trying to figure out, because of the licensing aspect, how do they do it? Do you know what I'm saying? So we go over to the market, and what you have here, you get the S&Ps at 2074, and that 2072 is game, folks. We got, let's see what kind of juice we got coming out of this market. Yeah, you get juice coming out of this market right now. This is going to be a major failure. This is going to be interesting watching this whole thing shake out, because what you do have is that, and you talk about subtle, how they were selling into this market out here today. We'll see whether you can, no, it's not even close. So check this out. This last 10-minute bar right here, someone's hitting this thing, and we have, yeah, you get 3 minutes left on this bar. This is the largest bar volume-wise we've had all day. It's not huge yet. It's still 20,000 contracts, but 20,000 contracts with, let's see, yeah, with 3 minutes left. This baby wants to get right down to that 7.2 area. If you break that 7.2 area, then you're going to have some damage. We'll see. Right now, it just looks like it wants to run into the 7.2, because if you break the 7.2 area, you can have a downdraft into 6.3 in about a heartbeat. The reason being is that that's how we went up yesterday, too. If you remember, at 0940 in the morning, guess what? Bottom line, rejected lower price, went topside. And as it was moving topside, it had that, it didn't have the volume behind it, but it certainly had the price moves behind it, and price moves in a big way. If we go take a look at some of the higher volume stocks in this low volume market, you have Twitter up $1.50, you get Apple down 88. Oh, and Apple, so check this out. This is going to be pretty wild watching this shakeout. I saw the first commercial for Apple last night on TV. And they are not going to sell the Apple Watches, and this just came across literally 5 minutes ago. They're not going to sell Apple Watches inside the stores, folks. What they're going to do is they're going to push everyone to the web in order to sell Apple Watches. When it comes to buying Apple Watch, it's time to think different. Angela Alrenix, Apple's sales chief, wants to scrap the company's tradition of having customers wait in line, sometimes for days, to get their hands on the latest gadget. Apple has instructed its sales force to push shoppers into the company's website to purchase the new smartphone, which it can be pre-ordered. It's going to be this Friday. That's where the pre-orders are going to be coming in. So we'll see how that whole baby is going to shake out. I can tell you, though, they're so smart. Apple, no doubt, is a marketer extraordinaire. I saw the first commercial last night, and they're just calling it The Watch. And even, I'm not going to get it, but I'm telling you, watching that The Watch is like, oh, yeah, I want The Watch. Why wouldn't you want The Watch? The Watch. The market, The Watch. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow is up 51. Nasdaq's up 7. S&Ps are up $1.50. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And you know, I'll tell you, if you've never visited the Tiger's Den, folks, you got to go visit the Tiger's Den. We have a great trading room, and you know, Terry the Tiger in there, he just came up with something. This is what's going on with Apple. This is so cool, it's insane. He put, I don't think they want to be embarrassed because there's going to be no people in line in the store. That's exactly what it is. There's no doubt. You know, the ad's cool, but that Apple deal, that's exactly what, that would be the smartest. You got to hand this to them, though. That's absolutely smart, because you know that when every single time that Apple's pushing product, what do? Send everyone, all the news media out to the stores. It's a big deal. That's so cool. That's the take. We'll see where this shakes out, but that totally makes sense. Because what they also had done is that when they came out with this, they decided to change how they were also reporting their numbers, quarter by quarter. By the way, and that is because of the same setup inside Apple, I expect. S&Ps, we'll get the S&Ps right now at 2073. And it's going to be interesting because what you do have, there's some time left here to basically put a little number on this market right now. I don't think it's going to be a large number, but as I said a little bit earlier, you break the 7.2 area and 6.3 is game in a heartbeat. Because the 7.2 area where I was going, folks, that's just the lows that basically had been established out there. You get underneath that level, and it could make sense. The dealers, large operators that trade in futures, they'll press this low out here, the 72.75, because if you do break that level, bottom line, they can get a quick 10 points on this in about a heartbeat. Volume-wise, is going to come in light in an extraordinary way, no doubt. On the NYSE right now, we'll do, we'll only do about 600 million. And that was what did happen yesterday, is you got to 900 million yesterday. So here they go. They're pressing it, man. You got to love this market, man. This is just they're pressing it, man. If you're watching Tiger TV, you should see them pressing this thing right now. This candle is just exploding to the downside. Not that they've hit it that hard yet, but they're right at the aspect. And if you've ever pressed anything, it's pretty easy to press it when you have a mentality that as you're breaking levels, they're all going to pile on right now, folks. That's what you're going to get. Window dressing's over. Bottom line, beginning of the month is over. All the above is over. And you know what? Bottom line, this is going to be wild watching this whole thing shake out. Because what you do get, because the expansion that we had inside the marketplace itself, after the jobs numbers come out, said quite a bit. And you can always get more to me, in a defensive posture versus an offensive posture. And what I mean is this. It's what the market has done that is the most deviant. And the most deviant deal, no doubt, yesterday was that when the jobs number come out, the dollar went down 1,300 ticks, gold went up, futures went down over 25. Then what ends up happening? You have all weekend long, so they can get all set up weekend long. Bad news is out of the way. Market was closed, right? Dudley comes out, starts, pushing the market around a little, gets everyone going, pushes it up again. And what is that all about, folks? That's all about distribution. Distribution in spades, too. Some of the Dow stocks, well, here, let's take a look at, we'll see, not that anything has any strength here. The Dow right now is only up 21 bucks and was up over 100. But this is what we have that's putting juice into the Dow Industrials. You get Chevron is up $1.70. Johnson & Johnson, that's up $1.13. You get Boeing up $1.66, and Visa is up 66 cents. Taken away from it, on the way down, you get American Express down at $1.25. Caterpillar is off 87 cents. You get Apple down 114, and you get Procter & Gamble down 55. Inside the NDX 100, what do we have inside the NDX 100? Bringing it higher, the biotechs. If the biotechs, when the biotechs fall apart, folks, this NASDAQ is going to be toast. The biotechs are holding the NASDAQ up. You get Alexa Pharmaceutical up $6, trading at $176. You get Vertex Pharmaceutical up $250, trading at $120. You get Seagate Technologies up $1, trading at $53. Taken away from it, on the way down, you get Micron Tech is down 50 cents, trading at $26. Viacom is down 124. Yeah, Viacom, folks, they get a large write-down coming. Viacom is trading at 67.37. And that little baby is, let's see, so you got a high volume swing low at 63. Let me put this on a monthly for a second. Viacom's going to have some trouble here. Viacom's off the highs of 88. You're at 67. This could be gamed at 55. So that's some real juice on the way down. That can be some real problems out there for Viacom. S&Ps, there they go. They hit them, baby. They're down 350. You're at 2070, and you get plenty of time to go to the 6.3. You know, we'll see if, in fact, they can get them down there, but you get plenty of time. So what the setup is going to be out here, folks, is that you're going to have a market that tried to get into highs, couldn't handle it. You know, as we did the first 15 minutes of the show, you want to study this. You want to study how markets push against volume and price, okay? Because this one is very evident that it just kept getting weaker and weaker. But you don't want to look at one side of the market. You have to look at both sides. You look at the correlation of how you're going up versus how you're going down, and versus the confirmation once again. And it has to do, no doubt, with the amount of times that the market can't make highs, make a run for the highs, reject the highs, and have lighter volume simultaneously. As you come over to our website at TFNN, what you're going to see in the very front page, folks, is this. I'm going to be doing a options trading course. If you have an interest in options and you want to really understand them, to trade them successfully, the course is going to be a week from this Wednesday, April 15th. It's going to be from 5 to 6:30 Eastern Standard Time. It's an hour and a half. It's only $97. Check it out on the front page of TFNN. You'll be happy that you came. The correlation that we're going to be doing, number one, is walking through a lot of different option trades, what you should be looking at the swings, okay? What I do with options is this, folks. It absolutely has to do with the correlation of the art of timing the trade. There's no two ways about that. It has to do with volume. But what it also has to do with, it has to do with the swing point. It has to do with what the premium is inside it. Like yesterday, I was going to put one option out, but what ended up happening is that it didn't make any sense. Why? Because the premium had gone up a little bit too high. And you can be right on the move, but if you're wrong and you're paying too much for the premium, whether it's a spread or it really doesn't matter. You know, put call, a put spread, a bear spread, a bullish spread, all of the above. It's crucial to really get your head wrapped around, okay, what is the premium you're paying? Then what you want is what? Is, in this particular case, yesterday, all I ended up doing was going to another equity inside of that same sector. That's the way that check out. And guess what? The sector itself is weak, but what had happened is that the premium wasn't built in the rest of the sector, okay? Bottom line, you know, that is tactical. It's tactical because of the key that the least amount of premium that you can pay. And what ends up happening, premiums go up and down. They go up and down pretty quickly, too. Bottom line, if you'd like to really get to understand those options, understand how you're putting them on, taking them off, check it out on the front page of TFNN. Market-wise out here, the NASDAQ just went red. You get the S&Ps, they're slightly red. They're down $2. Dow is up 16. If we go take a look at the diamonds, we pull the diamonds up and see what's happening inside the good old diamonds. What you have is this. Diamonds have done 5 million shares today. Yesterday, let's see, we're going into, yesterday it did 6.2 million shares. It was going into 5.3. And the downdraft that we're talking about is 8.1. So what you do have inside the diamonds also is that's going to be a major failure. IWM. Now, the IWM is the strongest indice out there, meaning up at these highs. IWM is also going to be a failure. The small caps, we did 12 million shares out here. Yesterday, you did 22 million. Ooh, this is cool. Ooh, this is intense. This is intense, actually. That's intense. We get 15 minutes left. Yeah, we get 15 minutes left, man. It's a beautiful thing. The Dow right now is up 19. NASDAQ is flat. S&P's down $1.50. You got gold down 8.20. Silver's off 25. We're going to be right back. Stay right there, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. 877-927-6648. You get the Dow up 6, Nasdaq's down 2, S&Ps are off 2.5. Some of the Dow stocks out here, what we're looking at, you get American Express down $1.27. Coke's off 155. You get Coke is down 15 cents. Big Blue is up 14. You got United Technologies down 29. Inside the end. No, let's go take a look at Walmart here. Walmart, where is she running? This is going to be interesting. So Walmart's at 80.51, and that little baby also is pressing lows, and she's pressing lows with volume expanded. Now, see, what's really cool here, folks, is that when you're looking at markets, right, you know that, this is late in the day, right? We know that we have a light volume day, right? When you see a light volume day, and this works whether you're looking at stocks upside too, you have a light volume day in this case, okay? When you see a stock that's going down and volume's expanded, what does that say to you? It says to you it's even weaker, okay? Because across the markets, you have light volume. So now let's flip this around the other side. Let's flip this around the side saying you get a stock that's going up. You get a light volume day, and you have a stock that's going up. That's really strong, folks, okay? Just wrap your head around that, because what does happen inside the marketplace is that you can glean a huge amount of information out of the markets when those types of divergences take place, okay? It's a big deal. If we go over to the, let's go take a look at the issues. We'll take a look at the XAU and the HUI right now. Both of these, okay? This is kind of neat how this is setting up. So it's going to be really wild watching. Will this get traction tomorrow or the next day? My take on it right now that it will. And the reason being, I really love how this is back down. The XAU is down 147. It's backing right into its strength from the first, okay? The high of the first is 69.10. We're at 69.02. If we take a look at the HUI, what you have inside the gold bugs index is this. The HUI right now is trading out, HUI is at 169.55. The high is at 169.53. They're both acting bottom line, just like they should. We went into the highs. They didn't have enough juice to take them out. You are backing down. Now, what's really going to be cool about the gold market, folks, is this, in this coming year. The gold market itself, so picture what happens with production. I've had the gold report since 2001, so I've seen this cycle, and it's been an incredible cycle, no doubt. But I've seen the cycle when all the CEOs were bearish, even when I was the first couple of years saying, I'm telling them it's going higher, and they're saying, I hope it is, Tom. Okay, bottom line, we knew we were in a bull market. Well, a couple of years later, okay? So what ends up happening at the end of that bull? And the end of that bull really was running at 2008, 9, 10, okay? Because we topped out in 2011. Well, what you had happen there, folks, is this. You had all these gold companies, okay, buying companies hand over fist for outrageous amounts of money. Then what did you have them do? You have production that's going to ramp up, right? Bottom line, production ramps up. Well, guess what? I'm giving you a fundamental deal right now, okay? But it's really cool. The gold market's so small that you can put this together pretty cool. I put it together technically and then grab it fundamentally. What's going on is this. This will be the first year that, this 2015 I'm talking now, right, that the production of gold, okay, is only going to go up 1%. The reason being is that gold has taken such a hit the last 3 years that the companies have pulled back over 50% in production. That's this year, 1%. Now, you want to take that correlation of the 1%, you take the correlation and say, okay, do we have more buyers in India? Do we have more buyers in China? Do we have more buyers in the world? My take is that, yes, we do. So what does that do? That puts upward pressure on demand versus supply. Now, here's the real kicker, though. Next year, 2016, guess what? That's going to be the first year that gold production has actually gone down. And it's going to go down because of why? Because of the exact same facts that we just laid out. So Supply versus demand, price and volume. Bottom line, folks, I suspect what you're going to see is you're going to see a run because gold's not going away. S&Ps, where we are at the S&Ps, it looks like they're going to shake out somewhere. Well, they go to quarter past. They're at 69.25 right now. And by the way, you do have the juice inside the market. Okay, this is coming down with real juice. They're pushing this. The last bar we did 45,000 contracts. And it was breaking, the low that it was breaking at the 72.25 had 40,000 contracts. So you broke it with volume, and that puts, game on the table of the 63. We'll see whether they can get to 63. You're at 68 right now. Bottom line is that the surprises, folks, come to the downside when markets sell off. That's where we're at, I suspect, right now in this market. We'll see where the rest of this does shake out. But what we do have, volume-wise, it's still going to be light volume. We're at 505 million, so that means it's going to come in at 600 million, which is anemic volume on the NYSE. On the NASDAQ, it's going to come out in anemic volume also. The NASDAQ right now is at 1.430. So what that's going to set up, about a 1.6. On the NASDAQ composite. In both cases, what you're going to have there is this. You're going to have a market that tried to get to a higher high, failed, had lighter volume, and it doesn't set up, it doesn't have to go to that October 15 swing low right now. What it does set up, however, is this. If we just go look at the SPY for a second, we put this on a daily, what you're going to see, it's going to set up that you're going to go to the bottom of the consolidation, and we'll see at the bottom of that consolidation is it going to have juice to take it out. The SPY is at 207.39. The bottom of that consolidation is 204.40. So, bottom line, it's let's see, we're on Tuesday. This is pretty cool because you get Wednesday, Thursday, Friday this week. You will have action. There's no holidays. There's no vacations happening. There's no all of the above. So, what I do expect you're going to see out here is that you're going to see this market try to get into these lows, and we'll see whether we can bust those lows out. And it's not that those lows have a lot of volume either. It's really going to be it's going to be how do we come into them. When we came into that low yesterday, we only did 114 million shares versus 153. So you can see why I couldn't bust it. There wasn't enough force coming into that last low that was generated on March 26th. March 26th, we did 153 million shares. We came into that, and we came into that with 114. So bottom line is that I expect that what we're going to see now is we're going to see another run. It's going to try it again. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. We have the Dow flat. Nasdaq's off 4.5. S&Ps are off 3.5. We're going to be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote's by James Garner. Believe in yourself and everything you can be. It's a beautiful thing. Market-wise, let's take a look at it out here. We had the Dow down 5, NASDAQ off 7, S&P's down 4. All of them failed, folks. We're going to go through this, but it was a failure. Tried to get into the March 30th high, couldn't handle it. Have lighter volume, rejected price, all of the above. Gold contract down $8.40, trading at $1,210 an ounce. What you have with gold is this. Yesterday, gold trying to take out its swing high. A little bit lighter volume, couldn't handle the price. Back down today, has lighter volume. I expect what you're going to see is that it's going to go after that swing high once again in the next few days. Silver, down 24 cents, same setup there, $16.86. Platinum was down $3, trading at $1,174 an ounce. Copper up 4 pennies at $2.75 a pound. Light sweet crude up $1.64 a barrel, $53.79 a barrel. Bonds, we had the 10-year flat, 129.12, 30-year up a full point and 3 ticks at 164.27, and King Dollar up 1,200 ticks at 98.17. The amazing deal with King Dollar is that King Dollar went up and gold didn't get smoked, nor did the equities, gold and silver equities. Euro down 109 ticks, trading out at 108.12. You got the yen up 83, trading at 120.37. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, if we go to the world of spies, what you're going to see is this, folks. Whether you take the indices, whether you take the ETF structures, all of the above, they all tried to do the exact same thing, and they failed. And what it is this. The SPY today got to a price point of 208.76. That got you over the high that was established on the 30th, over the high of yesterday. In both cases, closed underneath it and closed underneath it with lighter volume. Yesterday we did 114 million. Today we did 71 million. The 30th we done 96 million. Today we did 71 million. Now check this out though. This is what you really would have to wrap your head around. We were going into 159 million. So you had 71 million going into 159 million. Couldn't handle it. So what does it set up? It sets up, now it's going to go after the lower part of this consolidation, which is 204.40. Now, yesterday, what we did is this. When we came down on March 26th, we hit 207.24. We did 153 million shares there. So that aspect there of how we were going into the last swing low is saying you're going to go back to it. Why? Because the last swing low that was generated on March 11th, we only did 110 million. So correlation, first swing low, you do 110 million on the 11th of March. You came back down and you did 153 million. Yesterday, what we did, and that's why I saw a rejection of price, is that you only came into that with 114 million. So your correlation, not enough force to bring it down. Now you just flip it around. This is all the market always does, folks. The market either wants to bust up or bust down. Now, same type of exercise. Goes to a higher high, dramatically lighter volume, can't handle it. So what happens? Okay, now we're going to flip around and go the other way. Pretty cool how this works out when you get consolidations like this, because you can learn a huge amount about the marketplace, folks, when you have consolidations like this, because the clarity is not only there. What happens is because you're going back and forth inside the marketplace, that's when information gets released. If you're just trending one way, whether it's up or down, you can't learn as much about the marketplace as you can is that when you're inside a consolidation like this, because there's subtle signs, but they're screaming. The Qs. What do the Qs do? Same type of setup. We did 18 million shares. You got to a price point today of 106.70, which also got into the high that was generated of that 106.82. Couldn't handle the price. 18 million shares. Yesterday we did 24 million. The 18 million is going into 41 million. So you can see that correlation pretty intense. The small caps. What do we have with the small caps? Same type of setup. And when you get harmony in all of them, by the way, it's a whole different ball game. Many times in the marketplace, you have divergences. And divergences, bottom line, you're saying, okay, which one am I going to pay attention to? That's, what you have now, you get harmony. The harmony inside the small caps is this. Small caps get to a price point of 125.50 today. Got over the high of yesterday, which is 125.48. Closed underneath it. Yesterday we did 22 million shares. Today we did 18. You're going into, however, 42 million. It's right across the board. Gold contract. Let's go to gold, because here's where this is really wild. And what you have is this. So picture, the dollar index is up, traded up 1,200 ticks. That's a big number. Did it make a difference with the gold contract? No, which is just amazing, okay? Bottom line, gold back down $9.30. You did it with 79,000 contracts. The 79,000 contracts, folks, is coming into April 1st. April 1st, we had 114,000 contracts. Yeah, 150,000 contracts. Yeah, April 1st. We're coming into April 1st. April 1st had 151,000 contracts. Monster number, okay? Bottom line, what will happen? I suspect you're going to build some more cars. You're going to try to get up and over the 1220 area once again. Silver. What do we do with the silver contract? Let's take a look at silver. Silver is trading at $16.85. Silver also back down today, lighter volume. And it seems that silver and gold, they're taking turns as to what is looking better depending what day. Silver also back down with dramatically lighter volume. You're talking about 28,000 contracts versus 40,000. Silver's set up right now to make that run up to the $18.53. So it's going to be wild just watching how this shakes out as we move to higher price. Let's go take a look at the oil contract. What do we have with oil? Oil is trading at $53.89. And we take a look at this contract, CLK5. Okay, so oil out here today did 482,000 contracts. No, she's got some juice. Okay, so oil wants to make this run. She's in a consolidation, but she's going to make that run. She's going to make that run to the 56.08. That's the last swing high in oil on the 17th. And she is pushing with volume today. She got over the swing point. The last time we had volume, she was March 26th. Now, we had more volume on March 26th, but bottom line is that it was 482,000 today versus 515. You're away from that price, the price being 52.48, so that's saying that swing point is game. And we'll see how we get into that swing point, because if oil gets into the swing point and has juice behind the move, it can get some traction. King dollar. Let's go take a look at King dollar, because what do we have with King dollar? King dollar start moving yesterday, didn't stop this morning, went up 1,300 ticks. King dollar, however, is going to need a lot more volume. What you had with King dollar is this. You got price going, absolutely zero volume. That's zero volume, but you have 39,000 contracts. King dollar, folks, is coming into the downdraft that was created out there on the March 18th level. That's where it had 100,000 contracts. The following day it had 101,000 contracts. The next day it had 96,000 contracts. Next day it had 87,000 contracts. You're coming into that whole area. That is an extensive area. There's a lot of sellers up at that area. And what I expect you're going to see is you're going to see it very well could go to the swing point. The swing point is 98.97. Right now we're at 98.17, but I expect as it gets up there, you're going to see it get tired. Let's go take a look at the TLT. The TLT is the 20-year plus bond fund inside the correlation of looking at bonds. And this bond market is not done. It's pretty amazing. We pulled back today with 4.4 million. Rejected lower price. It ended up positive. Bottom line, this is building cause to get up to the January 30th high. Pretty intense, I'm telling you. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow finished down 5. NASDAQ off 7. S&P's off 5.5. We're going to be right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we had the Dow finish down 5, NASDAQ off 7, S&P's off 5.5, and they got a little more pressure coming into the close out here. If we go over to the, we'll take a look at the XLE, the XLF. We take a look at the XLE first, since, you know, what the oil market did. It did get a little traction out here. So XLE, what we did with the XLE is trading right now at 79.17. And we take a look at this. Not enough volume. You know, you get 14 million shares, Bottom line is that, yeah, it can creep its way up to this 82.43 area, but there's still not traction there, which is pretty amazing. If we go into the largest weighting structure again, you get ExxonMobil. ExxonMobil has some problems, folks. Okay, it's pretty amazing that it can't make it out of this 85 area. 85.75. Hasn't been able to make it again. Has lighter volume, has all of the above, just doesn't have it in it. Chevron, CVX. Now, Chevron, folks, was the largest mover inside the Dow Industrials today, even though the Dow was down. Chevron out here today was up 162. Took out a swing point, and they took it out with volume. So Chevron does want to move up to this 111.10 area. The XLF, let's go over to the XLF, the financials. We take a look at these financials out here. The XLF traded today, got to a price point of 24.31, closed at 24.12. Bottom line, not enough juice, not even close either. What you had is this, that little baby got into a higher price, rejected higher price, and did it with lighter volume. Now, folks, let's go over to our man, Mr. Andy Hecht. And don't forget, every Tuesday, Thursday, right here at TFNN, Andy's got an outstanding show right after me, 5 to 6 o'clock Eastern Standard Time. Also has a great newsletter, the Technomento Commodity Report. You can test drive that by coming over to our website at TFNN and go to newsletters, go to trading newsletters. You see the Technomento Commodity Report right there. Andy Hecht, what's going on?
Hey, Tom, how are you?
I'm doing great, man. You having a good day?
I am. I'm recovering. I was in Dallas all day yesterday.
Oh, yeah?
I finally finished my consulting project out there, so.
Good.
Yeah, got back very late last night, and looking at these markets, they look a lot different today than they did yesterday.
There's no doubt about that, man. Yeah.
Volatility, man. Lots of volatility. That's for sure.
And in the currencies. I mean, it's pretty intense. Well, hey, what do you think? I mean, the bottom line, you know, my bottom line is the dollar went up 1,300 ticks, but gold was down $8.
Yeah, gold only down $8, but I was disappointed we couldn't get over that 12.25 level. For me to come on board, I got to see it. I got to see it at above there.
Okay.
You know, failed up there again. Look, yesterday, very light volume day on the upside. Today, even lighter volume day on the downside. It's kind of like in nowhere's land. So
yeah, and I understand what you say. See, to me, it's a higher high with lighter volume today, though. That's what I tried to do.
Right. But yesterday's volume, when we came in, we gapped up. Also, volume was pretty light.
Oh,
but then again,
it was.
Yesterday, yeah. Easter Monday, so Europe wasn't around.
Right.
So I think we have to let this filter through. My only comment is I expect huge volatility in all these markets.
Right.
You know, look, it's like oil. Is oil going to get up above $56 a barrel? I don't think so. You know, we closed close to 54, 2 pennies off.
Right.
Right now we're kind of 18 cents off. All of these, what I think is you take positions in these markets, and when the market gives you profits, you take them quick because they can disappear in a heartbeat across the board.
No, there's no doubt, man.
Yeah. I mean, volatility is good. Volatility is a trader's paradise, you know?
Listen, it absolutely is. And large consolidations, which we're in right now, folks, also is. Okay, so it's going to be interesting watching this whole thing shake out. It's you know, hey, let me ask you something. You haven't been on since California. I mean, you know, I know it's a huge food basket. I mean, that drought out there. I mean,
oh, it's serious.
Yeah.
It's affecting the price of fruits and nuts big time. And we don't see that in the futures market.
And we don't trade those. Yeah, right.
We don't trade those, but hey, they're important. I mean, and yes, it is very dry. When I was flying back from Dallas yesterday, I flew over the Hoover Dam.
Yeah.
Coming back into Vegas.
Okay.
It's amazing how low the water level is.
Is it? Yeah.
It's amazing. I mean, it was shocking. Even the inlets in Lake Mead, very, very low. And I know California, I've been out there probably 4 out of the last 5 weeks working on this project.
Yes.
And it is dry. It is very, very dry in California, and it's a serious problem.
Yeah.
Listen, we know in the next, decades ahead, the most valuable commodity on Earth is going to be water.
Right. Yeah, there's no doubt about that.
That's a function of the growing population, and we really need to. It's very expensive to. There's lots of water on Earth, but you have to desalinate it, and that's very expensive.
There's no doubt.
Right.
We're going to have everyone who's going to be moving to Florida, even though we're dense, because we have one of the, in Tampa, we have one of those plants that are coming right off the Gulf, and it's amazing. I mean, it's been there for a long time too.
Hey, you want to hear something interesting?
Yeah.
The guy I met with yesterday in Dallas, and I kind of did this business with, he was telling me that in Dallas and in Houston, there have been more earthquakes, tremors, over the last couple of years, 2 years, really. Like more than he's ever remembered in his life. And the guy's in his 40s.
Yes.
And he thinks that it's due to the fracking.
Yeah, that I've heard that plenty of times, right? I mean, yeah.
It's amazing.
When you actually look at what fracking does, it just depends on how much fracking is done over a surface of land, right? I mean,
well, exactly. What you're doing is you're going in there and you're basically taking high pressure water, sand, and in some cases chemicals, and you're putting it in between the plates of the earth.
Sure.
And actually, it's a balance issue.
Well, I'll tell you couldn't do it in Florida, because in Florida, folks, we're all sand. Well, we are anyway. If you did it in Florida, we'd have sinkholes that would take down buildings.
Yes, absolutely. And you know where else you can't do it? You can't do it in Japan, where the prices of natural gas are the highest on earth.
Yeah.
And even if they have natural gas, they can't start fracking there because, listen, that place is prone to earthquakes anyway.
Yeah, there's no doubt about that. So now, let's see, gas. Gas is running at 269, right? Yeah. Okay.
I see the May contract 266.50. Nothing too special there. Kind of in a dead range, boring. You know what was interesting? Copper yesterday. Copper made a key downside reversal.
Yeah.
But we bounced a little today. I mean, there's a lot of volatility. I think we're going to see a lot of volatility. It seems like in commodities. Look, we came out of a period, Tom, from like 2003 through 2011, 12, 13, where commodities were active and a lot of people were in them. There was a lot of action in the ETFs. What I see a lot of liquidity drying up here, and I see bigger moves happening with less players in a lot of different commodities.
That would make sense. Now that's important to understand. That would absolutely make sense, man. I mean, because
liquidity is important.
Oh, it's huge. It's huge.
It's huge. And you get stung when there's no liquidity, when you put a stop in.
What happens, folks? You get stung when you're trying to get out. Right. They'll let you buy anything.
Easy to get in.
They'll let you buy anything, right? There's no doubt about that, man.
That's right. We used to call it certain commodities like frozen concentrated orange juice, palladium.
Right.
We would call them roach motels because you can get in, but you can't get out.
No doubt. Well, listen, man, you have a great one. We look forward to your show coming up. We got our man, Mr. Chris Gaffney, coming up next.
Excellent. Looking forward to that.
And we're going to be growling and prowling with the president of Everbank World Markets, folks. Andy, thank you so much. Look forward to the show tonight. You stay right there, folks. Our man, Mr. Chris Gaffney, is going to be coming up. Dow finished down 5. S&Ps are off 5.5. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. cycles. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the TFNN.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We had the Dow finish down 5, NASDAQ off 7, S&P's off 6.5, and we're going over to our man, Mr. Chris Gaffney. Chris, folks, is the president of Everbank World Markets, and as you're over at our website at TFNN, you can see the banner on the top of the side. You can hit that banner. We're going to bring you over to Everbank. Chris, welcome back to TFNN.
Thanks, Tom. It's always great to be here.
I'm telling you, man. And I just had Andy Hecht on, and we were talking about volatility, and it's amazing. It seems that every time that we do have you on, the volatility is there. It's pretty amazing. We had that jobs number. The market was closed. But certainly the metals, the currencies.
Well, and the currencies, yeah. The currencies were the big movers, of course. They got hit hard. Are turned around, actually. They've been hit since mid-March on expectations that the Fed wouldn't be raising rates in June as most had originally bet. So, that jobs number really hit the dollar, but we're coming back today. The dollar's up 1.25% today. So it was a big mover today.
Yeah, no doubt. No. Okay, so we had April 7th. We know that good old April 15th, tax day, we have to come up with the bucks so that our deficit can basically try to get paid off. And, as we come over to Everbank, can you talk a little bit about, because it's really unique what you have, meaning the aspect that you can take an IRA, whether you have one or open one, right? And you can basically, put precious metals inside that.
We can put precious metals in IRAs, and a lot of our clients are looking for safety, and they're looking. You mentioned the deficit here in the U.S. and we talk a lot about the debts that really the global debts that have been accumulated as these countries institute rounds and round after round of quantitative easing. So
yes.
They keep printing money, they keep throwing liquidity at the markets. It's helped the stock markets, equity markets, of course, but in the background, they're creating all of this debt. And so, eventually that debt, somebody's got to pay that down, and somebody's got to pay that off. And it creates some volatility that we've seen. And it also creates an environment where clients are searching for somewhere to park funds, and hard assets are in what are typically referred to as safe havens.
Sure.
And metals certainly is one of those. We can hold them in IRAs. We can hold them in non-IRAs. And it's a place that clients like to park funds, like I said, for safe haven purposes.
And folks, what's so cool about this, okay, so I happen to have one myself, okay, and what happens, just so if you think, these are so simple, it's amazing, because what ends up happening is that every year, you have to say how much is in it, but the bottom line is that a metal is a metal, okay? So when you're signing off, like, you have to sign something and say, okay, this is what it's worth, and you send it back, it's a no-brainer. I mean, because whatever gold is that day, guess what? That's what your account is worth.
Right.
You know what's really cool, Chris, is that I was reading something today, in fact, because I put the gold report out on Tuesdays, okay? And what they were talking about is that we had the extraordinary run from 2001 going up to 2011, right? And we know how these gold companies are, unfortunately, is that they always spend too much money when gold's like high, right?
Well, yeah.
Yeah, so
they put a lot of, they're cutting back on the amount of gold they're mining, if that's where you're heading.
I am, and it's huge. Yep. I know.
Yeah, they're ending their capital. We had some huge losses of some of the big mining companies, of course, and they offset those losses by reducing their production. And of course, they're not going to produce as much when gold's down, and so they're going to cut back. We'll have a record production level, I think, of gold in 2015, but then it's going to start dropping. And what I read is, and maybe I read it on your piece, but that it's going to, really start cutting in 2017. So that's got to drive those prices higher eventually.
No doubt. And you have India and you have China that, you have more people in the middle class.
Demand's growing.
Yeah.
Demand's growing. So that's a positive on the supply-demand. Demand's growing. Supply is going down. That tells you something.
It does. You just brought up a great point, because about the aspect of it's not just the United States. When we look back 10 years, everyone thought that the United States was going to be the only one that was going to be in a deficit. And what's really happened, right, is that the whole world is basically printing now.
Right. QE in Europe. Europe started full-blown QE. They just finished their first month of full-blown QE. We've got Japan continuing to ease. We had the Bank of England, they've ended their QE program, but they're certainly not raising rates. They're, in fact, they may come back and cut them again. So we've got a lot of countries, and then China. The biggest one of them all, the elephant in the room, China is now creating more and more stimulus for their economy. And in fact, that's what kind of boosted commodity prices a bit today. We had a little bit of a goose from China saying they're going to try to stimulate their economy a little more.
It's amazing that all of us, I think, how much we can learn in the markets in general. And what blows my mind about China is this, Chris, right? And folks, this is like crazy how this works. China, like 1 second, says, oh, we're going to pull the plug, right? And then, like, what do they pull the plug, like, for 3 or 4 weeks? And then all of a sudden, like, the real estate will go down. So they say, oh, no, now we're going to flood the market again, right? I mean,
One of the advantages, and I'm not getting political here at all, but one of the advantages of controlling their economy is that they do have total control of their economy. They don't have to rely. They just don't have to go out there and say we're going to cut rates and hope that the banks then start lending that money out. They control the banks, so they actually lend the money out. So I think they're able to get things turned much more quickly, even with the size of their economy. They're able to get reactions in their economy much more quickly than some of the more established economies.
Yeah, no doubt. So when you're over at everbank.com, folks, hit the investing button, because I want to talk with Chris about we're in a world market and foreign currency, your foreign currency accounts. Let's talk about that a little.
You bet. And we do offer foreign currency accounts, but I'm going to share something with your listeners that isn't even out there yet.
Oh, cool.
And we're going to, they'll be first to hear about it. We're coming out with a new Market Safe CD. And these Market Safe CDs, it's going to be called the Future Economies CD. And it's a way for investors to take advantage of the emerging market currencies of Brazil, China, India, Indonesia, Mexico, and Turkey without having any principal risk. So it's a market-safe CD. It's not going to be live on our website till April 9th.
Okay.
So I'm 2 days before rolling this out, but I wanted to, if they check our website under the investing tab or even go out to the website on April 9th, you should be able to see more information on it.
And folks, these are huge, okay? The way specifically, so let's talk a little bit about the aspect, and it's important to understand, folks, okay, with a Market Safe CD, you have no risk of losing your principal. So,
correct.
So can you talk a little bit about how the upside works versus just being flat?
Sure. In this Market Safe, we take the average of those 6 different currencies over a 5-year term. So it's a 5-year term, and we take the average return versus the U.S. dollar of those 6 currencies, and that's what the client will receive. Now, if the average of these 6 currencies drops versus the U.S. dollar, then the clients will just get their principal. So they cannot lose principal. If they put $1,500 is the minimum. If they put $1,500 into this CD, they will get $1,500 back at maturity after 5 years. Now, if the average of those 6 currencies move higher versus the dollar, that's the return they get. And this has a unique what we call a jump note. So if it's above 0 but below 10%, we're going to give them 10%. So even if they only have a 3% average return versus the U.S. dollar over that 5 years, the clients are going to get 10%. So it's a jump note. It goes right from 0 to 10, and then anytime over 10, they'll get that additional return also.
Now, folks, so, we all know that the rates basically are low. Okay, so when you take a look at this aspect, Chris, this is really cool about what you have here with this CD, specifically because, let's say we just take rates, okay? Let's say it's at 1% or something, right? Yep. Well, when you take 1%, let's say you put $5,000 in, okay, over the course of 5 years, you get $250 back, right?
Right.
And what's so cool about this, so check this out, folks. Would you rather put a CD like Chris is talking about and take the risk and say, okay, do I want to make $250? Because that's what you get probably anywhere else, or less.
That's the opportunity cost. Yeah,
right?
That's the opportunity cost.
Or more money, and you're not going to lose any principal. This is a great time for those, man.
It is, and it's so, these 6 currencies are pretty volatile, and a lot of people say, well, I would never, want to go into Turkish lira or the Indonesian rupiah. I know there may be potential great upside, but there's also potential downside. So that's why we think this is a good vehicle to invest into those emerging markets because of the volatility and because you're protected against
Absolutely. Thank you so much. Have a great one, Chris.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick or tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. And don't forget, our man, Mr. Andy Heck, is going to be coming up next, growling a problem with you out here. And as you're over at TFNN, folks, okay, what you're going to see in the very front page, I'm going to be doing an options workshop. That options workshop is coming up April 15th. It's from 5 to 6:30 at night. It's only $97. Check it out right in the front page if you want to understand exactly how options work, where you want to get in, where you want to get out. This is timely. I love this. We got Brent from Martinez, California. We're going to talk the drought. Hey, Brent, what's happening, brother?
Hey, Tom, how you doing today?
We're doing great, man. Thanks for calling, man. Appreciate it.
I have a good positive story to relate to you that just happened today, actually.
Awesome.
My wife and I were watching the weather, and they were forecasting last night that we were going to have a storm today.
Okay.
So she suggested we ought to try to put out some garbage cans to collect some of that rainwater.
Yeah.
You know, to put them underneath our downspouts. I'm like, okay, yeah, sure, we'll give that a shot. So we did it last night, and we could kind of only prop it underneath there. We couldn't get it completely upright, just, you know, kind of about a 30-degree angle. And so we did that and went to bed, and I always wake up early. I was up about 4 o'clock this morning, obviously still dark outside.
Yeah.
I go look, and, you know, it had started raining kind of in the middle of the night, so I go check, and sure enough, the thing's full. It's kind of starting to spill out of the thing, and so I was able to pull that out. It was already heavy because it, you know, weighed quite a bit. Each gallon of water is 8 pounds. So
yeah.
I maneuvered it out of there and kind of propped it up and bucketed it out of there and into another garbage can, and then I was able to get the thing in there fully upright. Well, long story short, by the end of the day, every bucket I could find, every garbage can I could find, I completely filled up with water. And it was probably enough water to get me through the entire summer, pretty much, with what I was able to collect.
That's amazing, man.
You know, way more than I ever thought I could collect.
You know what's so cool? That had to be fun, too, right?
Yeah, it was a workout.
Yeah, but you know, hey, listen, it's great having a workout and you can have fun at the same time. And you know what's so cool about that? I mean, that's really just taking care of yourself, taking care of your family, taking care of, you know, you basically your neighborhood, man. That is freaking dynamite, man.
I know, I was pretty impressed with how much water came off of there, and it wasn't like an unusually big storm. It was a good one.
Yeah.
You know, moderate rain for most of the night, and it's just amazing how much I could actually gather just doing that one thing. And so I just wanted to share that with you.
Well, we appreciate that, man. That is so cool, man. You know, it's amazing. There is no doubt that the aspect of what you can actually do and when you're collecting water, the only time I've done it, Brent, okay, well, that I remember anyway, is that I do it when I'm sailing. Okay, because what ends up happening, folks, is that when you're out there sailing for a while, if you want to get cleaned up at all, do you know what I mean? I've done it like that. Do you know what I mean? Put a couple buckets out, hope it rains, man, so you can clean up. Because meaning that if I'm stay out in the boat for 3, 4, 5 days in a row, do you know what I mean?
Yeah.
And that works too. It blows my mind. It's like, hey, you feel great, man. You're throwing some fresh water on you. You're feeling good. That's wild, man. Have to love it.
That's the other thing we've been doing. We take buckets into the shower with us, and when we're, you know, have to get the cold water out of the pipes and get it warm, we collect that water too. You kind of have to do everything possible at this point to you know, at least get some water to water the plants and just anything at this point.
Well, you know, it's interesting. I was talking with someone, who was it, on the phone yesterday? I know, it was one of my clients out, and we were talking to one of the Tigers out in Denver last night. We were talking. And his son was going back to school in California, and we were talking about it, and, you know, I had been out there like 30 years ago. And I said, you know, and this time, you know, they're claiming that, oh, this is going to stop California. I'm saying to myself, man, California was supposed to be dead in the water like so many times in the last 30 years. You know, it's like, it's not going to happen. You know, I mean, it's great hearing the story, meaning, you know, because, you know, hopefully you'll get a lot of snow next year, but the correlation is that, you know, this was supposed to happen years ago, too, and it seems that good old Mother Nature can come around and just bombard it, and then it fills everything back up again. So it's great hearing that someone like you and the people out there, I'm sure there's a lot of other people out there that are doing that, and that saves a huge amount of water, right?
I think so. I'm just doing everything I can on my part, our family in general, to save water and just, we have to at this point. And I've been here my entire life, and there was times like this back in the 70s where we had, you know, several years in a row, and there's just way more population now than there was back then.
There is. I know. I saw that, man. The population, that blows my mind, man. It really is.
It's a big difference. I really appreciate, again, everything you do, Tom. I made a call to Basil the other day, and I just wanted to reiterate to you that you've done a ton for a lot of people out there, and I really appreciate it, and I'm sure everybody else does that's out there.
Well, listen, man. We appreciate you guys, all you Tigers and Tigresses out there, because we wouldn't have a business without you. So thank you so much, man. Well,
it's like a big family. It's a big Tiger family.
That's right. It's a beautiful thing. Totally, man. And okay, man, have a great one. Have a safe one. And hey, folks, there's that whole aspect. Okay, you want to live longer? Guess what? Get some kind of a family out there, okay? Because that Google Ventures, you go check out that Google Ventures. They're giving that guy so much money, it's sick. Well, no, it's good. It's good. It's good. But the bottom line is that you have to have some. Well, you don't have to, okay? But the bottom line, if you do have some kind of community, you have something that drives you, whatever that is. It doesn't matter what it is, okay? Bottom line, that is what the essence of passion is. That's the essence of life is. That's will keep you going, and you got to keep moving. Okay, the bottom line, I don't care what you do out there, keep moving, because if you don't move, that's it. It's all about energy. So it's great hearing from Brent, hearing from all you Tigers and Tigresses out there. You're going to stay right there, because our man, Mr. Andy Heck's, is going to be coming up next. He's going to be talking, of course, markets. He's going to be talking commodities. And our man, Mr. Chris Gaffney, that was so cool, that Market Safe CD. That, it's so wild about that Market Safe CD when you think about it, folks, is that, CDs don't pay a lot of money. There's no doubt about that, okay? But bottom line, there's plenty of people that want the cash back, which totally makes sense, by the way, okay? Because you're out of risk, okay? So making something is great. What happens with that Market Safe CD, though, is the bottom line. You have the opportunity to make a lot more than a normal percentage rate, and you don't have the downside. That's a pretty big number, because the way that the dollar had moved off the lows versus all the rest of those currencies is pretty intense. So the real key is going to be, okay, does the dollar pull back? Where is that whole thing shaking out? And we'll see where that shakes out. But that is coming out on April 9th, and we'll make sure that number one, that's up on the website, and you can check it out. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. You stay right there. Our man, Mr. Andy Heck's coming right up. And, folks, if you're listening in your car, go on your phone. It's TFNN.mobi. You can listen to Andy right now. Go get him, folks.